Alrighty, well, we should be rolling. Well, welcome everybody to tonight's webinar. I'm excited to be here with you. This is one of my favorite webinars, talking about hot tax deductions. The cool thing about this topic is it affects every one of us. If you're a small business owner, boom, we got to talk about these hot deductions. So I'm excited about it, and it's going to be good stuff. Now, for those that are here live, I would love to take some questions while you're watching. So please know that you can email me. You can also raise your hand, and on the GoToWebinar function, you can bring out your, I think you could even bring out your webcam if you wanted to, but you can at least raise your hand and verbally bring up a question if you'd like. But just email me, mark@markjkohler.com, if you have any questions during the webinar. Again, I just love this monthly time to show my screen and dive in a little more specific on topics. It's not like the radio show where I have guests and tips and we're all over the place. And it's not like a presentation that's recorded where there's no live interaction. So these webinars are a unique opportunity, and I'm grateful to many of you that are, again, watching live and then later on recorded. And I'm hoping you find this as a huge benefit to you and your business. For just 20 bucks a month, I mean, this is really powerful information. You don't have to pay me per hour for a whole hour. You just get this fraction of the cost for an hour. So I'm grateful to be with you here. Now, for those that are here live, you can see the webcam and see me. Personally, I got my little blue screen back here. I've been doing some video. I'm working on that QuickBooks video that I've been promising for months. Oh my gosh, it's so hard. Teaching QuickBooks is so hard and keeping it real. But you're going to love it when it's done. It should be done soon. But anyway, if you're listening, if you're watching later on, the recording currently at GoToWebinar does not pick up the webcam. So you won't be able to see me if you're watching this later. So you'll just be seeing the slides and getting the voice. So anyway, I've got a whiteboard here behind me, but I won't use it because then it would, of course, disenfranchise you that are watching later. So let's jump through a couple little introductory comments here to make sure we're all on the same page. I know many of you have just joined the webinar series and this may be the first webinar you're listening to. So these are different webinars that I'll be going through, adding other ones, rotating through them over the next year or two. I plan to keep doing these webinars from now on. This is it. Every month I'm going to be doing a webinar. If there's topics you want me to cover and want me to change these up a little bit, I'll do it. I'm here for you, for Strategic Wealth Alliance members. Hey, it's, you know, the squeaky wheel gets the grease. So if you want to holler about a certain topic, I will cover it. I'll make sure I bone up on my research and create a little PowerPoint for it. So I'm here for you every month with these webinars. Now, the next month's webinar is we're going to talk about paying family members, which affects a lot of you, but not all of you, I'm sure. But if you have teenage children, young children, kids at college, maybe you're supporting a parent, niece or nephew, aunt, uncle, blah, 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 we're going to talk about paying family members. And this would include your spouse and some 401k planning too. So this is a great topic. So the next webinar is Tuesday, August 27th at 6 p.m. For those that are watching recorded, this is a good one to note your calendar right now. I'll usually send out the GoToWebinar meeting link about 24 hours to 2 days before, but put it on your calendar now. That way you know, you'll be at least set aside the time, and then you can look in your email for the link. A couple other announcements real quick is I'm doing my live workshops this fall. Please look into them. I know you will love them. It's 6 hours live. I got some new stand-up comedy I've been working on. And all sorts of cases and statutes and laws, which really matters. And so I know some of you have seen me in a live presentation before. This is a once-a-year thing because I'm going to be bringing you updates. We got the new healthcare law that continues to roll out. That's a big one. It's under 300 bucks. Bring your spouse for free. Bring your kids under age 18 for free. I'm doing 6 locations: New York, Chicago, Seattle, North and Southern California, and Hawaii. So please, if you'd like to even celebrate in December and come out for a few days to Hawaii, you could write off maybe all of the trip, if not a large part of it, and come to my workshop. And then it's on December 7th. You can't forget December 7th, the day that will live in infamy. So that's what it is in Hawaii. So come check it out. I was going to do my workshop at the Pearl City Country Club, which is right near Pearl Harbor, But as you imagine, December 7th is a little busy around Pearl Harbor that day. So I'm in the general area at another conference center. So anyway, check them out. You can go to my website, markjkohler.com, and you can just call the office and talk to Justin if you want to order as well. I'm doing a $50 early bird discount for the next 5-6 days. So if you buy in the month of July, it's $50 off. So it's only $250. Again, bring your spouse for free. Bring your kids under 17. So that's what's going on. I guess that'll probably do it for announcements. Let's dive into it. Here it is again. Send your questions to this email. Now, if you ask me a general question, we're still going to cover them. I've got my email open on my other screen here, but we'll do those more at the end of the webinar. So any question you have that maybe I didn't cover at open forum radio show, or you've been at a workshop from last year, you've been reading my book, and you have any question, that's something I teach, I'll do the best I can. If you want to talk about surfing in the U.S. Open at Huntington Beach this weekend, which is where I want to be, I've been working straight for 3 weeks. I haven't surfed or been out and done anything really fun for 3 weeks, so I'm going to try to go play Saturday. But if you want to talk about that, I'd love it. Okay, so, but if you have a question on the topics we're hitting, I'll be taking those emails, you know, as we go through them. So feel free. Now I'm going to put my glasses on here. So I've got my nerdy CPA glasses on for those that are watching live. I hope you appreciate that. And let's go. Here's the topics we're going to hit tonight. Dining, big one. Entertainment, travel, electronics, home office. I can't say enough about these big five. And we're going to be going over these big five deductions in order and with their own little slide. Mostly it's going to be me flipping around. We might look at some of these sorts of things. I like to do these little diagrams. This is a diagram from last month where we talked about QuickBooks and different checkbooks, and if you haven't watched that webinar yet, please do. But, you know, yada, yada. So I'll come to this type of diagram if we need it. But we're just going to kind of go through each one. I'm here at my stand-up desk. I don't know if some of you knew that. I've switched to a stand-up desk. What's cool is I have a little button here. I can push my desk down, or I can go up. For those that are watching on the webcam, hopefully that made you smile. But anyway, that's what helps me burn some extra calories, is I got my stand-up desk here, and I'm cranking. Okay, so dining. Now, there was a little tip on this part on the radio show this last week, too, so I think you're going to like this. First, dining. Let's just go through it. Very underutilized deduction. Most of these are that we're going to be going over tonight. A lot of CPAs scare their clients out of dining. I don't know why. I think this is a very, very powerful write-off. So let's just go through some of the bullet points here. First, it's limited by 50%. Now, we're going to go through a couple very, very unique options at the end of this that are not limited by 50%. But 99% of the time, whenever you dine, even if you're traveling away from home, it's going to be limited by 50%. Now, what that means is you write down all your dining, but when we do your tax return at the end of the year, we're going to peel off half of it as non-deductible. But you put down it all. Now, this includes tips, alcohol, appetizers, the whole 9 yards. I mean, everything. Throw it all into the dining bucket. Now, you can actually write off dining by yourself. That's one of those little bullet points down there further. When you are traveling, and the Supreme Court has said when you're traveling more than a reasonable commute from where you're at. Now, I'm in Irvine. My home's in Mission Viejo, 20 minutes away. So if I go to LA for the day and go grab a burger, I'm going to write that off because that's outside of where I normally commute. So for many of you, once you leave 30 minutes of your area and you're going to an area you normally don't go to and you run through Wendy's drive-thru, write it off. Put it in your dining. This is one where if you have an S-Corp or a small business bank account, always pay for your dining over here. Now, if your dining is off the chart and you've got $12,000 in dining and you only made $5,000, I'm going to trim your dining down. I'm going to tell you no way. But again, so many people don't put down dining they should. My wife's texting me a little bit earlier here. She's saying maybe we'll meet for dinner. If I go to dinner with my wife, we definitely will be talking about work. I'm going to write off dining with her. So most of the time when I'm talking business with a partner, a officer, director, family member that's a part of my company as an employee, I'm going to be writing off dining. So write it down. That's the most important thing. Again, if some of you have questions while we're on this topic, I'll be doing send and receive. So shoot a little email over or raise your hand on this little board here. Now, the receipts, here's the deal with receipts. Receipts are audit protection. I don't need to see your receipts. I don't want to see them. You should do your best to keep your receipts, but it's there only if you get audited. So I tell clients with their smartphones now, take pictures of your receipts when you finish dining. Write your tip, send it off to the waiter, and that's a great time to pull out your smartphone and take a picture. Click. Here's what the dining was, and it goes off to your cloud, and you should have all those little receipts go into a little folder. I have a little pile over here for scanning for one of my kids that when they come in and scan, all receipts go into a folder. So for 2013, throw all your receipts in there. Now, don't use cash. This is a big deal. Whenever you dine, don't use cash because you know you're not going to record it, right? Try to stay away from cash. Use a debit card, check. Does anybody take a check anymore? Anyway, but use a debit card and try to track all of that dining through your bank account. And again, use your business bank account for it. But I don't worry about receipts. Those are there. You can print them out later and use them in the case of an audit. But just track all those dining expenses. Got a comment here from Brian. Let me see here. I'm going to move these so that in the future your guys' emails don't come over and everybody doesn't see them. Thank you, Brian. He says, does your wife need to be an employee of the company in order to write off dining, or is it okay just because she is your wife? Well, she would argue that just because she's my wife, I should write it off. But no. Brian, I want her to at least be an officer, director, manager, owner, something. She needs to have a title of some sort. Now, in your business, the ownership, if you're married, is going to be very loosey-goosey, right? I mean, you and your wife own your business together. So by default, just because of marital law, your wife or your husband is going to own 50% of your business as a marital asset. So I'm just saying I'd love to have them on as a listed officer or director. A lot of times you're going to put your spouse on as an employee anyway, but I would not stress about it. In my whole history of an accountant, for the last 13 years, 14, I've never seen a client audited for dining and where an IRS agent said, oh, that was with your spouse, forget it. It's just not going to happen. They're not going to zoom in on those little items. It's just not going to make sense. So write it down. Throw it in there. Per diems. Okay, this is another little thing. Now, don't fall asleep here. This is good stuff, folks. I want you writing all this stuff off. But some of you that travel a lot to certain cities go, well, Mark, I didn't keep any receipts. I don't know what I spent on food. You can do what's called per diem. Now, there is a chart at irs.gov that tells you what the per diems are per city for breakfast, lunch, or dinner. So if you say, oh, I went to Chicago 5 times last year, and I just used cash, I'm like, all right, take the per diem. So I'll say, how many days were you in Chicago? I was in there for 3 days. So I had 3 breakfasts, 3 lunch, and 3 dinners, and I take the per diem amount. So you could go down to the grocery store and just buy a loaf of bread and eat peanut butter and jelly, and I could still write off the per diem amount. So some clients, again, that have a regular travel schedule with their businesses will just book the per diem, and it's actually more than they actually spent, and you can do that. So think about the per diem if it works in your situation. Entertainment-related dining is fine, but you need to separate them. This oftentimes happens with hotels, too. I have clients that go to a hotel, they order room service, and then room service ends up on the travel bill. So, oh, I just ended up writing off 100% of my travel. See, travel is 100%. Dining is limited by 50. So when it ends up on your hotel bill, a lot of clients will kind of bury it in there. If you're doing that, don't tell me. I want you to be honest. I want you not only to file your taxes honest, but someday at Judgment Day with God, you want to say, I didn't cheat on my taxes, right? We don't want to cheat. So make sure that you are separating your dining from entertainment. Entertainment's 50%, but it should be on a separate line. So dining, entertainment, travel. Those are 3 different lines. I'm going to jump down to these 2 last points here, parties and training for customers, company picnics for employees. Here's the deal, and this was on the radio show this week. There was a there is no 50% limitation. So you can write off 100% of dining when you're paying for employees' food at the workplace, or a company party, or a training meeting. So at my 6 locations that I'm doing workshops this fall, I'm in the works of trying to work out lunch at most of them, depending on cost, so that people don't have to leave the hotel. I'll maybe do sandwiches or something moderate. But if I do that, because it was a part of a function, a party, or a workshop, I can write off 100% of that dining. Or if I bring in Subway sandwiches for my staff in the afternoon or at lunch or evening because they're working late, I can write off 100% of that. So for some of you in that situation, on your QuickBooks, you want another line that says travel, dining, entertainment, and 100% dining for employees or workshops. See what I'm saying? So try to keep that a little separate. Annual meetings, great write-off when you're traveling. For example, if you come to my December 7th Hawaii workshop, you can write off your travel, but dining is still limited by 50% while you're there. Even if you come by yourself, you can still write off dining. You don't have to go with someone. Typically, dining is when you're with someone. But anyway, okay, so we got a question by Valerie here. Let me pull this up. Valerie says, I usually pay tips in cash even if I put the meal on a card. I take it I should no longer do that. Well, Val, that's hard. You're right. Because, I mean, think about it. You're not getting a write-off for the tip. Because when you're running around with cash, you know, when are you going to write it off? So it's kind of hard. Now, one thing that I'll do, okay, Val, here I'm on your side, is when I go traveling to a workshop where maybe I'm going to a CE class myself, or I'm going to teach or do whatever, I'll stop at an ATM and take out $100 in cash, right? And it's for tips, valet, taxis, things like that. And I'll put on the receipt for travel to Seattle for workshop. And so that way I know that ATM expense was not just a draw. It was an actual write-off. And if you don't keep, and if you keep the receipts, that's fine. But when you pull cash out of the ATM, what is that, right? Who the heck knows? So it's not really a good thing for write-off purposes to be running around with cash. But so if, Valerie, you're keeping track of some of those ATM withdrawals and writing on the ATM receipt what it's for, and then categorizing it in QuickBooks for those categories, that's cool. Then you're getting a write-off for it. But cash is scary, so be careful with that. I'd rather see you do the whole thing on a debit card, so we know. Put my glasses back on. This is for Gilbert. How do you keep track of the 100% versus 50% dining write-offs? Well, what we do, Gilbert, is we have on our QuickBooks, so when I do a receipt, usually when I'm buying, usually when I'm buying lunch for a workshop or employees, it's going to be a bigger bill, right? So I know when that's coming out on my bank statement that that was for the office, or that it wasn't just me running through a Wendy's drive-through for $6.50. I mean, that was a $66 charge for a platter at Subway. So I know. So what I do is I just earmark those as 100% dining when I take the receipt or when I do my QuickBooks. What we talked about last week was when you're doing your QuickBooks and you're going through and reconciling, when you see those big dining charges and you know it was for your employees or a workshop or a company party, then you can allocate them when you do your QuickBooks. So that's why it's good to do your QuickBooks once a month or so, because if you're doing your QuickBooks from last year, you're never going to remember, right? I mean, it sucks. So you want to try to be doing your reconciling on a regular basis, and that way you don't miss out on some of these things. Now here, let me give you an example. Now here, I'm going to finish dining with a fun little tip. Let's say you throw a company party at your house, and you go to Costco and you buy a bunch of steaks and a bunch of food at Costco for the trip. I mean, for the company party. 100%. It's a company party, and you went to Costco, and you're like, Mark, that's not dining. I went to Costco and bought steaks. Still 100%. And it's grocery store because it's a company party. So again, those are great receipts to keep track of, and when you earmark them in QuickBooks, keep track of them. And it really helps out on your tax return at the end of the year, obviously. Big, big deal, right? So, okay. All right, so there's dining. I want to make sure we're I want to think, we're going to come to travel in a minute, but dining is limited by 50% generally. Again, we hit the points. Okay, now entertainment, big one. I really love the entertainment one. I'm going to take my son to a baseball game next week. I'm excited about that. I feel like I'm looking up. I need to move my desk down a little bit. This Saturday, we might go to the U.S. Open Surf Championship, like I was telling you, and I might take a couple of the kids. My wife might go. If I go buy tickets to anything, I'll probably classify it as entertainment. My daughter's been working here at the office all week, so I would classify it as kind of a bonus being part of that. Basically, entertainment is when you're entertaining with an employee, a vendor, customer, potential client. That's entertainment. And you need to be talking about business, or it needs to be business related for some reason. Like you're going out to entertain someone because of their work, because you're trying to get their business or something like that. You cannot write off entertainment by yourself. So if you go golfing by yourself, you're not going to be able to write that off. Make sure you golf with someone. This is why the book, oh, I wanted to bring this up. This is one of my favorite books, and I'm trying to get this guy to come on my radio show. It's titled Never Eat Alone. Some of you may have seen that book, and the author's name just escaped me right now, but it's co-authored. But I'm trying to get the guy on my radio show actually for next week. It's titled Never Eat Alone, and it's a great point. You should never entertain alone. Don't go. I know some of us need a break alone, especially if you have teenagers or kids. You know what I'm saying. But you want to try to eat with someone, entertain with someone, and talk a little business. So it's always a write-off. It's limited by 50%. This is where hobbies and toys are a great write-off too. It's part of this entertainment thing. If you've got four-wheelers, or you're using them in your business, trucks, houseboats. I've got clients with boats docked down here at the ocean, and they only use it when they're entertaining employees or customers or vendors. I write off 100% of their boat. Let me give you an example here. I have a client up in Deer Valley, Utah, where they have a season pass, and they're also a realtor. And they have one of those season passes where they can get in the little gondola and go up to the very top of the mountain. Well, it's kind of a premium pass, right? Well, if you're a realtor and you're showing property on the mountain at Snowbird or Alta, you can go in that line and you could have clients with you that you're going to be showing cabin property to. Well, I asked my client, I go, do you always go skiing when you're showing property? Absolutely. I never go skiing unless I've got a client with me and I'm talking about the property on the mountain. Good answer, right? So we write off their ski pass. Now it's 50%, limited by 50%, but I write off their entire ski pass as entertainment expense. So you want to be thinking outside the box when it comes to entertainment. Now, skyboxes are very expensive. You're really only going to be able to write off the ticket cost, not all the luxury aspects of it. Club dues are going to be hard at a local golf course. Rotary, that doesn't include Rotary or Chamber of Commerce. But if you're going to really go buy a golf membership to a club or a skybox, call me. I want to run you through the rules there, because you're not going to be able to write off as much as you may think. Ooh, which brings up, let me see if I've got it here in travel. Cruises. Yeah, we're going to come to cruises in a minute. We've got to watch out for that. But that's entertainment. Let me see if anybody has any comments or questions on entertainment. I hope you're having a good time. I am. This is so fun. Okay. All right. No emails there. Okay. Now let's go over to travel. Now travel. Oh, I talk about this all the time. It's one of the most underutilized tax write-offs. I love travel. Let's look at our list there. Hotel, air, valet, tips, rental car, gas, tolls, taxi, limo, ferry, subways, horse and carriage. All of that is 100%. This is 100% write-off. In fact, I want to go in here and just adjust that. 100%. This is very, very helpful. So especially if you have rental property in another state, whenever you're traveling to go check on your rental property, that's something I've talked about a lot. Oh, and okay, let me give you a little tip. I had a client this week She said, Mark, I'm flying out to New York to drop my daughter off at college. Could I write off the trip? And I said, let's talk. First of all, is your daughter on payroll? Yes, she is. I said, what role does your daughter play? Well, and this was a little coaching because I've been working with her and getting her daughter on payroll this year. I said, what's your daughter do? Well, my daughter is my marketing director. She's in charge of all my social media, doing my weekly newsletters, managing my podcasts. My daughter does all that. Is she going to do that from New York? Yes. What are you going to do while you're out there? Well, maybe we'll catch a little workshop. Maybe we'll go visit some other competitors' locations and make it a marketing trip as well. All right. Now, even though you're dropping her off at college, I may write off part of the trip as travel. So if we can be creative here, this is important. And I also told her about my workshop in New York in November. She's like, cool, I'll make sure my daughter goes to it. So this is where we want to be training our kids on entrepreneurship, getting them involved in the business, so when we travel to or with our kids, we can write it off. So my wife hates this. She jokes about this all the time. She's like, can't you just show me you love me and take me on a trip where there's no business purpose? Don't write it off. No signing books, no speaking. Just take me on a trip and show me you love me by not writing it off. And I'm like, no, I can't do it. I've got to get a write-off for our trip. So anyway, it's hard. This is the banes of being married to Mark Kohler. It's not all it's cracked up to be, ladies, even though, you see me looking young here, and I've lost 15 pounds in the last month or two. I know. There's a price to pay. Okay. Now, cruises, watch out. This is one where you've got to be very careful. I had a dentist, a client of mine that's a dentist, make a goal for all of his staff. And he said, if we reach X number of dollars in sales, I'll take you all on a cruise. It was like a 3-day something cruise. And they were like, oh, and they worked so hard. And then he spent a bunch of thousands of dollars on this cruise trip for all of his employees. Well, then he showed up at my office, 6 months later, and said, hey, I want to write off my cruise. You took them all on a cruise? Why didn't you call me? And he's like, what do you mean? It's a cruise. It was a bonus. It was travel. It was business travel. No, it wasn't. The IRS has special rules for cruises. There's a per diem amount you can only write off per day on cruises, and it sucks. This is why you don't see a lot of my conferences on a cruise, or you don't see continuing education on cruises anymore. The IRS felt they were getting ripped off because people would go on a cruise, they'd show up at the conference for a half hour, and then the rest of the day they'd be at the pool drinking Mai Tais. So cruises, watch out. You're not going to get the travel write-off you think. So what I've told a lot of clients, if you want to take your staff on a trip, go to an all-inclusive resort in Cancun, and I can write off the airfare and the resort and do some training meetings while you're down there. No problem. I can probably write off 100% of that, but not with a cruise. So be careful there. Woo! Hope you guys are having fun. I don't see any questions coming here, so someone work it. Send me some questions. Let me see here. Send and receive. Send and receive. All right. Okay. Oh, I shouldn't have hit the webcam. I see me in the webcam here. Got to make sure I'm looking good. Okay. All right. Rental properties. Oh, I already said that. Please make sure that you're traveling to go visit your rental properties. Big deal. It's huge. And I've had some people say, well, Mark, don't buy rentals where you travel because they may not be the best location for a rental. Buy rentals where they make sense. I totally agree with that. You want to buy quality rental property first, but hopefully you're looking where you normally travel. So if grandma lives in Rexburg, Idaho, hopefully you're looking to buy rentals in Rexburg, Idaho. That's what I've done because grandma lives in Rexburg, Idaho. But there are good rentals there too. So just be careful there. Clients, vendors, consulting, we've already talked about that. Make sure every trip you take has a business purpose. Very, very important. Electronics, huge write-off again. iPads, phones, internet, office equipment. I just had a client consult yesterday, and she said, can I write off cell phones for all my kids? I said, are all the kids employees? She said, yes. I said, great. Do you need to get a hold of them for the role they play? Yes. Then you can write off 100% of their cell phone. This is a new rule. I shouldn't say too new. It's been about 18 months to 2 years out now, but a lot of CPAs miss this. You can write off 100% of a cell phone, even if you use a lot of it for personal. As long as you need it for business, you get to write off 100% of it because the personal use just comes with the plan. Now, there are some guidance out there that says, well, if you've got, you know, gigabytes and gigabytes of data for Netflix that has nothing to do with work, you can't write off that, right? But, I mean, you're not going to get audited on a small fraction of an issue there. So more and more people are seeing the opportunity here. Be careful. I don't want to see, you know, $9,000 a year in cell phone, but it depends on, again, how many kids you have and are they working in the business. And this could be, again, parents. You may use your mom or dad to help you with your books. They need a cell phone. You can write off their cell phone. So think about that. All righty. Well, let's see here. What else we got? Home office. Okay. Boy, we're just burning through here. Geez, we're going to be done 15 minutes early here. But again, folks, be gathering your questions here if you have a question on a non-hot deduction topic tonight. And we'll hit those here in a minute, too. Okay, so home office. Now, Dustin Johnson, my Chief Operations Manager, who teaches my staff on a daily basis kind of the Kohler strategies. We talked about this today because I said I'm going to be teaching home office today. I want to make sure we're on the same page. Now, with your percentage, okay, let me start out with this. If you have a sole proprietorship, there's actually a home office deduction form, right? Many of you have seen it, right? There's a home office deduction form. You fill it out. It's based on the square footage of your home. You attach it to your 1040 tax return, and that establishes your home office deduction. Now, there's been a new change with this law this year where there's a base amount you can take. It's just kind of a flat fee. You say, I don't want to do the form. I'll just take this base amount. And that's a possibility. However, I don't like my clients to be in a Schedule C, right? We want to ultimately be in an S-Corp structure. If you have a small business and it's growing, ultimately you're going to be in an S-Corp. So how do you do a home office if you're an S-Corporation? So what we do, let's go up to our little diagram here. Right here, we would take care of our home office as an expense of our S-Corp, but we're going to book it at the end of the year as a home office expense reimbursement. So it's more of a home office reimbursement, and this is where I like to stick this. So home office reimbursement. What we're going to do is take a percentage of your square footage for the house and then add up all your expenses and do the math. But we're going to do it as a journal entry. Now, this is beautiful because we can bury it in your S-Corp return. So let's say you've got, 10%, 15% of your home is home office, and you've got, $2,000 or $3,000 a month in utilities and mortgage payments and all that. Well, we're going to write off $300 to $400 a month and as a home office expense, and then just do the math and book it at the end of the year. Well, folks, that's like a $3,000, $4,000, $5,000 write-off at the end of the year. So when we start adding all this up and we start looking at dining, entertainment, so let's say you've got $200 to $300, maybe $400 a month in dining, bare minimum, right? If you're out on the road as an entrepreneur, you've got some entertainment, $200 a month there. There's $600. Divide that in two, you got $300 there. $300 of literal dining and entertainment a month that should be a write-off. Travel. Let's say you're averaging, again, $300 to $400 a month by the end of the year when you do your annual retreats, your family summer trips, your Christmas trips, some flights here and there, checking on your rentals. You could easily have $3,000 to $5,000 a year in travel there. So now we're talking $4,000 in dining and entertainment by the end of the year, $3,000 to $4,000 in travel. Okay, now we're up to $8,000 in write-offs. Electronics, we've got our cell phones, our internet, our iPads, our iPhones, computers, equipment in the home. We're going to spend another couple grand on that during the year, right? So you're at $10,000. Then you throw your home office in the mix. That could be $300 to $400 a month there. You're at another $3,000 to $4,000. Guys, that's a $13,000 to $14,000 write-off bundle with these hot deductions. And we're just getting started, right? Isn't that cool? I mean, and this is not being overly aggressive. It's being honest. It's just tracking and noticing it and being aware of it. There's so many people that don't take advantage of this, and it just adds up so quickly. I just love it. So, you know, I don't know. I'm kind of dorky. I kind of get into this, so I'm kind of excited about it. But home office is a good one. So if you're doing an S-Corp, we're going to do a reimbursement strategy. Bury it. It's a very low audit risk, and we love it. Okay, well, I'm going to go back over here to my emails, and let's see what we've got. We've got some questions. Oh, I should have scrolled up. It looks like there was another question from Valerie that's squeezed in. Valerie says, hey, Mark, cell phone. Do I need an alternate line before I deduct my cell phone? If yes, does it need to be a landline, or could it be another cell phone? Val, I'm so sorry, you're right. I think you've heard me talk about this before, and so you're right. The rule is you can write off 100% of your cell phone, but you have to have at least one dedicated line for personal. What the IRS says is, hey, we'll write, you know, you can write off 100% of your cell phone, but we need to make sure you've at least got a line for your home. So it could be a landline, or it could be a second cell phone dedicated for your home use. So if you're married, write off one of the spouse's cell phones, probably the more expensive one, in the business, and then leave the other cell phone alone and call that the home line if you don't have a landline. So yes, you can deduct it, but you're right, Val. You need to deduct that. And look at her little note here. Before printing my email, think about the environment. Gosh, look at that, Val. You're amazing. Changing the world one email at a time. Okay, all right. Now let's see. We've got another email from Kevin. He says, if I'm prospecting in Florida, can I write off the RV on the trip? Or can I write off a rental house if used for prospecting? All right, Kevin, I might want to have you, ooh, what happened? My screen kind of blacked out there. Don't know if you guys noticed that. Okay, so Kevin, this is a good one. All right, this is really important what Kevin brought up. First of all, let me try to back into this question. First of all, shopping for rental properties is not a write-off. So I had a client, I think in the last week I talked to you about it. He said, Mark, I'm going somewhere. Yeah, where was it? I just talked about this. Anyway, the point is, he was saying, hey, I'm going to go shop for rentals in Vegas. Oh, yeah, I remember the conversation. He's a doctor of ours. Okay, he says, I'm going to Vegas to shop for some properties. Can I write off my trip to Vegas? And I said, no, not unless you buy something. And he goes, well, I'm going to go meet with my realtor. I go, I know. But the IRS is like, hey, we don't know if you were just screwing around in the casinos or were you really shopping for rentals. Unless you buy something, I can't write off the trip. So this is an important point when it comes to rental properties. If you're going to write off travel to your rentals, buy a rental there. You can't just write off travel shopping for rentals. Now, Kevin's talking about prospecting. So if you're out trying to build up a client database and you're trying to build up client relationships, if you're meeting with clients in these other areas, like in Florida, and you can show that these relationships and these meetings resulted in sales, then Kevin, write off the trip. I'm cool with that because you're prospecting. You're making sales. You're meeting with people. These people are buying things, and it's resulting in business. As long as you can show that relationship, you're good. Write off the trip to Florida. Now he says RV. RVs are a great tax write-off. I'm so impressed you brought this up. In fact, I'm going to go over here and put this in travel. Here, RVs. This is not the auto. We have I do a whole show on auto, but RVs are a good one for travel because I have clients that go to trade shows and they only use their RV for trade shows for their business. I write off 100% of their RV. That means I can depreciate your RV. I can write off gas, repairs, and maintenance. Or we could do mileage. But with an RV, you're going to want to go actual. So if all you use your RV for is business, going to trade shows, prospecting, meeting with clients, and checking on your rentals, and you can show that those trips resulted in a sale or business, then I'll write off your RV, Kevin. So you're right on. So I know I took your question in reverse, but hopefully I answered all that. So folks, RV is good stuff. Keith, he says, if I'm collaborating on a software project with 2 other self-employed engineers, we go to lunch almost every day. We discuss work quite a bit during our lunches. I've been charging these lunches to my corporate credit card and intend to deduct these lunches. Am I all right even though these engineers are not directly part of my company? Let me use a technical term here. Freak yeah. You're dang right you better write those off, Keith. That is freaking doing business, and I love it. So as you go out and joint venture and work with others and you're collaborating on a project that's making you money, then you're darn right you better write it off. I have no problem with that. Most of my lunches are a write-off because I don't eat lunch alone. I take clients out, I take employees out, and we talk business. So I'm freaking writing off lunch. So there you go. Keith, have no problem with that. Love it. Okay, question from Gilbert. Can you take home office expense and reimbursement strategy for an S-Corp or one of the other? If so, is one a bigger advantage? Now, Gilbert, I know you're an MD here, so this is, we got to talk about this. This is important. This is good for everybody here. First, you can't take the home office and the reimbursement strategy and double dip. You can't take the home office expense in one business and then the reimbursement of another. There's only one home office, and what are you using it for? Now, if let's say your home office is $400 expense, and you want to write off $200 in the S-Corp and $200 in your rental property business, I'm okay with that. Come up with what your home office expense is, and you could spread it among 3 businesses. I'm fine with that. In fact, burying it in 3 businesses is reduce your chances of an audit further. But I can't double up. Now, guys, this is really good what Gilbert talked about here. So let's say Gilbert, this is his, let's say this is Gilbert's medical practice. So his medical practice is at a standalone location. So this is over in town. He's got a real office, brick and mortar office, and this is where he meets most of his Motar, sorry. How am I misspelling that? Mortar office. And he is mortar, there we go, mortar office, brick and mortar. So he's meeting with his patients at this office. Now, the question is, can he take the home office with this situation? No, because there's a 2-part rule for home office. It has to be your exclusive place of business, and it's where you primarily do business. Well, if he's primarily doing business here, and it's also not the exclusive place to do it here at home, it's not going to work. So, Gilbert, keep that in mind. You can't do a home office reimbursement in an S-Corp when you have a primary location. However, why don't we write off your home office for your LLC for your rental properties? Or your other business. See, everybody out there, most of my entrepreneurs have 2 or 3 different businesses going on. So we can take the home office over here, home office, even if we don't take it here. So no home office deduction, but we can do it on the other side of the equation with your rental property business. So I hopefully that helps, Gilbert. But you can't double dip. You can't take it in 2 places. And you can't take it here if you have a regular office. Now, this is for those out there that are realtors and brokers and engineers, and you've got your business where you go to the office every day and meet clients. I can't do a home office if this is your main business area. We would do the home office for your side businesses, your rehabs, your fix and flips, your rentals, something like that. Okay. Valerie, I love your questions, everybody. Thanks so much. Val says cell phone. So I assume this also means, I love it, Val's beating up the cell phone question. It's good stuff. She says, so I assume this also means I need to have the phones on different bills so I can pay with different accounts. Or is there a way to split them up later? Oh, Val, you know, I mean, for audit purposes and efficiency, it would be great if you had your cell phones on different bills. One was home office or home, and the other one was business. That would be great. But if they're on the same bill and you try to, you know, maybe you pay for it with the business and then reimburse yourself, or pay for it with personal and then write yourself a check for the business part, that's probably how I would do it. If they're on the same bill, I would pay for it personally and then have the business reimburse you for the business portion and then write that off as cell phone. Make a little note on the invoice, put it in the file, scan it. If you ever get audited, you got it. So you could pay for the cell phone bill personally and then have the business reimburse you for the business portion. That'd probably be the easiest if you're on one bill. But it's not the end of the world if they're not on separate bills. Just find a way to do it. Brian says, so can I write off a meal with my wife as long as we discuss business? Can I write off a trip we take as owners meeting as long as we talk about the business and document it? Yes. You're talking generally. So when you go out with your wife for dinner and you're talking business and she's an integral part of your business, this is the ethical issue. I mean, you've got to make sure that you're saying, yeah, we're talking business. It's not just, hey, how was work today? Okay, that's not talking business, right, Ryan? So, but if you really are, you know, this is the ethical issue. You can definitely talk business with your spouse, and I would want you to write that up. Can you write off a trip where we take an owner's meeting and write off the dining and the travel related to that? Typically, you're going to be able, obviously, be able to write off an annual trip for your board of directors meeting. That's a no-brainer. Now, I can't do 10 days in the Cayman Islands, but we want to write off our annual meeting. Now, if you and your wife have a habit of every other month going on a little, say you and your wife are going on a little weekend jaunt every month or so, and you talk business, but it's really for pleasure, I think the IRS could have some issues with that. So whenever you travel, if it's not your annual meeting, you want to make sure that you're doing a conference, you're doing meeting a customer, checking on property, doing business, some sort of transaction. This is why, again, and I'm okay, maybe it's a shameless plug, but I'm going to say it anyway. This fall, I'm doing 6 workshops around the country. Stop in on one of them, for crying out loud. You're going to love the workshop, and then it allows you to write off the entire weekend and a couple extra days because you're going to do some business while you're there. You're there for the workshop. So that's huge. So I'm always looking for little CE classes where I want to go. I know my wife and I want to go to San Francisco, so I've been looking for CE conferences in San Francisco. So when we go, I'll go to a class for a few hours, and then we'll spend a couple days. Boom, right off. So I think your owner's meeting and a little trip, Brian, just be careful that it's not too often without showing some business purpose. But again, see, and a lot of this, okay, everybody pay attention here. Here's an important point. A lot of this is relative, right? It's relative to how much money you're bringing in. If your business is just starting and you're only bringing in $2,000 to $3,000, $5,000, $10,000 of revenue, and you're wanting to write off all this crap, do you think we're going to get audited maybe? Yeah, it's not maybe a good idea, right, to maximize all these write-offs. But some of you sending me emails tonight, I know you've got well-established businesses where you're bringing in over 100 grand a year. Well, then can we write off this stuff a little more aggressively? Hell yeah. See, it's all relative. So the more money you make in your business, the more aggressive I can be with your write-offs. This is why the rich get richer, right? All right, whatever. Okay. Kevin says, Mark, can I write off a flying car to travel to Prospect? They are $279,000. Well, you know what, Kevin, you're going to actually like this answer. Can I write off a flying car to travel to Prospect? Yes. Guess what they're called? Called Cessna, you know, a little Cessna airplane. I have clients that buy airplanes, and they only use their airplane to travel. You know, I was working, where'd it go? I was working on one of my clients' airplane deals today. It's right here on my desk. I have a sit-down desk over here too. So I have clients that have business airplanes. Whether it's a flying car or a plane, I don't care. If you use your plane to travel, to meet customers and vendors and check on real estate or check on your business, and that's the only reason why you use the plane, I'm going to write off your plane. So I know you're trying to be funny there, Kevin, and you are. That was good. My daughter brought up this flying car the other day. I haven't looked at it on the web. But anyway, the point is here, though, is that you're damn right. Whether it's an RV or a plane or a flying car or a ski pass or whatever. See, the IRS says any expense incurred in the production of income is a write-off. So if you're trying to make money and you're having to spend money to get there, to meet your people to make money, then you're going to get a write-off for it. Even drug runners get a write-off for the plane to Colombia to pick up their drugs. You know, that's a big area of the law. I almost went into that after law school. It's called criminal tax law, where criminals get busted. And then guess who comes next after they get busted by the ATF, for example? The IRS shows up and says, we want all your money for taxes on the drugs you sold and the profit you made. Kind of the Al Capone issue, right, where he didn't pay taxes on his alcohol and prostitution rings in Chicago. So they got him on the tax evasion. They never did get him for murder. They got him on tax evasion. So there's tax lawyers like me that all they do is help criminals file their tax returns, and they get write-offs for the planes and all the bribes they paid as long as they can substantiate it. So I've read cases where guys were trying to prove they had bribed different political officials in third world countries for their drug running so that they could take a tax write-off to help avoid the tax on that. Isn't that crazy? But it's a write-off. See? Boom! Okay, Gilbert says, Mark, very helpful. Thanks. You bet. You're awesome. One more question. I am on call a lot. When I am dining while on call, is that 100% deductible? That's a great question. Well, the answer is going to be probably no. I hate to say that, Dr. Sinas. The problem is when you're on call, it's kind of like me being at work. I'm kind of on call. You know, I'm here at the office, or maybe whenever you're dying by yourself and you're on call, you're still kind of at work. What the Supreme Court has said is that you can only write off dining when you're traveling, if you're by yourself. Now, there might be a case out there, Doctor. I'm not sure, but I have not heard of a case where you can write off dining because you're on call. So if you see something, let me know. But if I hear something, you'll hear about it. But I have not been able to see where you could write off dining while you're on call. That's not even 100% deductible. That's not even 50% deductible. I don't think dining by yourself while you're on call or while you're at business, like for example, I'm going to leave this webinar here in 2 to 3, 4 minutes, and I'm going to run over to Wendy's. I haven't had lunch, or I was going to make a Ron Swanson joke from Parks and Rec. I haven't had lunch since yesterday. I'm starving. But but I'm going to go grab Wendy's for dinner, I think. And I can't write that off because I'm by myself, and I'm just running around where I normally commute. So it's tough. Okay, this is final call. So if you're at the bar, this is the last bar tender call for any drinks, any questions. This is it. I'm doing send and receive. Okay, well, I'm going to go to my last slide here. This is the thank you, and I want to thank all of you that were here live and that are listening recorded. I love doing my webinars every month. Please spread the word. If you spread the word and there's a little link, if you want to be an affiliate, I can pay you for some of your references for others that might join us. I love doing these webinars. Please check out my workshops for the fall. There's a little discount the next 5 days. I'm not going anywhere. And if you need my team to prepare your tax returns or set up an entity or help you with your business planning and all that good stuff, we've got an amazing team. You can call the main office for any appointment with me or my partners or staff. We're not going anywhere. And if you ever aren't feeling love and you're frustrated, send me an email and I'll crack the whip on my team. We're not perfect, but we hope to serve you for many years to come. So thanks, everybody, and you guys have a great night, and checking out until next month, August. You saw the note at the top, August 27th, I believe it is. So double check that and put it on your calendar. Thanks, everybody, and have a good night.